Welcome back to another weekend review by NLC Capital. This is a review of the trading week starting with July 11th, 2016. We're going to be looking at all three major indices after a monumental week, and we're going to tell you what we think and what we're expecting to see ahead. Action. The first chart we're going to look at is the Dow Jones Industrial Average. This week we recovered all of our Brexit losses. We made new yearly highs, and it was a very monumental week. We broke out above our 3-month pattern where we're just consolidating, and now it looks like we're going to continue breaking out and going higher. We had a full green day, as you can see right here. We broke above this resistance line along with this one. Seems to be the recurring pattern, just something to watch out for. And all the indicators point towards making newer highs and going higher. We're not too far away from our all-time high right here, made back in 2014. And we're very excited for the coming weeks and months, because usually the second half of a trading year is usually the strongest. Political fears are starting to die down. Donald Trump is losing grasp, and he's not the favorite of the stock market. Not to put political interest within this video. Just the market looks great for the next 6 months. Looking at this weekly chart, we have a double bottom here, again, which would explain why we have this nice move. We broke out of these two resistance trend lines, one being the most recent one was last week, and what we see is a flag pattern here. You have the upward spike here from the recovery in mid-January of this year, and then we recently consolidated. You can kind of see that here. Made here, the long trend up, consolidated, looks like a typical flag pattern, and now we just broke out. So this can mean the next few weeks we'll be going higher. We'll continue another leg up, and we think you should be long the market. Indicator wise, stochastics is trending up, the RSI is in a bullish trend, and the MACD is just showing a tremendous amount of momentum within the Dow Jones. The next chart we're going to look at now is the Nasdaq 100 index. This is again one of the major indices, widely tracked, and again this week we have another breakout. This is the recurring trend. All the indices are breaking out. The Nasdaq, to us, we're not big fans of it. If you're going to go along the market, we don't think that technology is going to lead the market. To us, we really don't like the Nasdaq. It's in overbought territory right now. It's coming off an oversold on the RSI. We think you're going to hit resistance right here on the RSI, which you're right there. Nasdaq is definitely going to lead. If you see some short-term bearishness, the Nasdaq is definitely going to lag. It's going to get hit the hardest, and again, we're not fans of it. Let's put it like that. You do have an upward trend line forming right there. To get a better picture, we'll look at the weekly. Hate when the charts do this. And it's still doing it. You have kind of the that wedge pattern forming. You are breaking out, but unlike the Dow Jones, you're nowhere near the highs. You're still another at least 3% away. Again, it has been lagging the other markets all year, and we think it'll continue to do so. You see, we have this consolidation period that's been going on for about almost 2 years now, and it'll most likely continue, in our opinion. We don't have much to say about the Nasdaq. We're really not fans of it. We advise our clients to stay away. All right, guys, and for the final chart, which is our favorite to track and just by its beauty, is the S&P 500. We have lots to say about this. It's a beautiful chart. We have a pretty sizable, we consider this a consolidation period. I mean, you look here, prices stayed within this range. I don't want to extend this and mess up the chart, but prices stayed in this consolidation period from late 2013 all the way until now. We think the market's going to break out, at least the S&P 500. It's going to break out, go to new highs this year. Definitely towards the end of the year, we'll be trading much higher than we are now. You could quote us on that. Just several strong trend lines here. Trend line here, strong bullish trend. We fell out of it, found some support. We have a little bit of a double bottom here. Again, this chart doing this. Double bottom here, traded up almost to new highs. Again, same thing, traded down. This was the pullback in early January this year, and then we had a strong uptrend again. This time we had a nice tight consolidation period, which is, in our opinion, readying us to make new highs. We are sitting at next to the near highs. The high is 2,134. We're sitting at 2,129. We are 5 points away from new highs. We think we're going to definitely make new highs next week on the S&P. Momentum's just crazy good. I mean, look at that. Such a strong uptrend. Another crossover on the MACD. RSI, beautiful trend. I mean, everything's making beautiful trends. Double bottom on the stochastics. We are super bullish on the S&P. We have been all year. Great companies within it. You should be buying the S&P. New highs next week. That is what we think. To sum up this video, we think you should be long the S&P and the Dow Jones. You shouldn't be. You can be involved in the Nasdaq, but just know we think if this market does pull back a little bit, Nasdaq's gonna hit it the hardest. If this market makes another leg up, it's gonna lag behind it. We don't think technology is gonna, be the leader this year. Financials definitely will make a recovery. If you're holding consumer staples, energy companies, your conservative companies, you should think about maybe lowering your position size in it, taking on a little more risk. We really think this week and the coming months you will see new highs on the S&P and very well on the Dow Jones Industrial. Both charts look like they want to go higher. They have momentum in them, and they just broke out last week. This has been another weekend review by NLC Capital. Make sure to follow us on all of our social medias. On Twitter, we give out free trades frequently. And as always, like, subscribe, comment, stay trading.